Hi there, Jasmine from Redwood Financial, and this week's frequently asked question is how do I maximise my allowances for this tax year? Well, so that's a really broad brush question in terms of the fact that there are so many different allowances out there that we need to be making use of. So the first question is, what tax allowances are you particularly concerned about? Is it income tax? Is it inheritance tax, for example? Is it your ISA allowances or your pension allowances? But generally speaking, the first thing that you need to do is make yourself aware of all of the different allowances that are out there that are tax efficient and that are going to help you in terms of maximizing your financial planning and making it as tax efficient as possible. HMRC are very happy for you to legitimately use as many tax allowances as possible to make sure that your estate is organized in such a way that you pay a fair but the minimal amount of tax that is owed legally from that point of view. And so allowances are a great way that we can organise our estate and make things as tax efficient as possible. Whether that's making pension contributions and getting the income tax relief, whether that's maximising our ISA allowances and making sure that we've got as much of our savings and investments in completely tax-free growth environments and wrappers. But you've also got your income tax allowance, and are you making the most of that? Or could you be taking income from other sources to make sure that you're using up your income tax allowance every year? You've also got things like your capital gains tax allowance. That one often gets misused and is a really good way for clients to generate additional income from their investments if needed, but without triggering any tax. So when it comes to maximizing your allowances, it really is about understanding what are you most concerned about? Which tax is it that you're trying to offset or reduce the cost on your estate? And then it's about taking professional advice, either from an accountant or a specialist financial advisor like ourselves, to really understand what allowances are you leaving on the table that you maybe weren't even aware of or that could add benefit to your financial planning. That is something that as a financial advisor, your financial planner should be doing that with you every year at your annual review meeting. And if not, is something that might be a bit of a red flag. Certainly here at Redwood, we make sure that all of our clients are using their allowances regularly to make sure that each tax year their investments are held in the most efficient way. And we're always giving them and sending out reminders of their allowances if they've gone unused or about to run out before the tax year end. So that's my biggest bit of advice, is to think about the tax that you're worried about and that you're trying to reduce, and then take the professional advice to see if there are allowances that you should be using or aren't quite at the moment utilizing fully to maximize the overall tax efficiency of your financial planning. Hopefully that helps answers this week's frequently asked question, and I look forward to answering more of your questions next week.